Hi traders, in today's video I am going to talk about why trading algorithms and strategies overall need less frequent optimization and less frequent stress testing with Monte Carlo analysis, quant analyzer or any stress testing environment on higher time frames like the starting with the 1 hour time frame to the 4 hour and daily time frames. Why these time frames need less optimization and testing overall, less frequent? And the first and key reason is that when you are trading on a higher time frame, if you compare it to the lower time frames like the 1 minute chart, if you compare two traders, you make them sit in a room, and the 1 minute chart trader is going to be running around, just open and close trades, and there will be a minor news event. The chart will be up and down and up and down, and it is going to be crazy. And at the end of the day, the 1 minute trader, or most of the 1 minute traders, they can't close their eyes because they wake up at 4 a.m. and they check the charts. Of course, there are intelligent ways to trade on lower time frames as well, with completely automated algorithms that you can trust because you built it or you optimize it, you stress tested it, and most of the time they are not the martingale ones. And the trader who is trading the 4 hour time frame or daily time frame, that person is going to watch movies, read the news, I don't know, lift weights, talk to its lover, anything, because on the daily time frame, higher time frames, the market is not that volatile at all, because the noise is reduced on those time frames, and compared to the 1 minute and 5 minute or even 50-minute charts, it is much less fluctuating and much less volatile, and the noise is just not really an issue most of the time. And when the market has a news event, a minor or even major news event, on the higher time frames there is so much less fluctuation and noise in those situations. And so traders who are trading on those time frames, they don't have to optimize and test and stress test their strategies as frequently. Of course, they have to do this from time to time, like yearly, or if you are really into trading and it is your job, 2 times a year. But you don't have to do it monthly or weekly, on the very low time frames, because it is just another time dimension, and you are looking at everything from another perspective, from a bigger perspective. And the second reason is connected to this thinking, this thought process, and it is there are much more recognizable trends. And it is a huge thing when you can recognize trends and you recognize long trends in the markets, you are winning. And on higher time frames, you can read the markets at a much higher chance. Usually patterns have higher probability to be fulfilled, and if you are using a good risk to reward ratio, you are going to have a much higher chance to win overall in the long term if you are trading on the higher time frame charts. On the lower time frames, there will be so many signals that you can't really distinguish the good signals from the bad ones, because you have to build so insanely complex algorithm or strategy to do that. And or you have to optimize your strategies frequently. And this is why I personally trade and recommend to trade on the higher time frames, because you need much less optimization and stress testing. If you have the time, you can trade on the lower time frames, but most traders don't have the time for that. Um, so longer trends are really a key in trading, and on higher time frames you can spot them more accurately. Now, I have to tell you that the best strategies have a multi-time frame analysis. For overall trend recognition, you are using the higher time frames, and to precise entry, like price action based entry, you are using the lower time frames, and you combine these two. The third thing is also connected to all this thought process, and it is that you will be getting much less signals, but much accurate signals. So, for example, like a crossover strategy and like exponential moving average crossover strategy, there is no way really that it can work long term with the same settings on a lower time frame without reoptimization. And on a higher time frame, it can actually work for years, but of course, you are going to get only a handful of trades in a year, so it is not for everyone. The fourth reason is that spread won't affect your trading. I'm not saying at all, but it will affect your trading on a much lower scale than in lower time frame trading. And on a lower time frame, and especially with scalping methods, most of the time spread is crucial. And in high volatility like news events and in situations like that, spread can really eat your whole profit. And on higher time frames, it is not the case. Spread is not really an issue. I am usually testing my robots with really high spreads, also with variable spreads as well, and there is no real difference even in a 10-year backtest with different spreads. But on a scalping strategy, there are huge differences, so you have to really choose your instruments that you are trading. And it is also crucial to backtest your strategies with normal spread and extreme spreads, as well as another kind of stress testing besides quant analyzer Monte Carlo analysis. So in conclusion, all these things together, like the less sensitive nature of higher time frames to news events, the bigger trends, the less signals but more accurate ones, it all comes together to the conclusion that you need less frequent optimizations on higher time frames, and therefore you are going to get a more of a hands-off approach, so more of an automated approach to trading. I don't say that I recommend higher time frames for everyone, but in my opinion, they are better overall for your mental health, for your psychology, and if you just want your EA to be trading on the markets in a completely automated way for a longer period of time, and reoptimize your EA, your strategy, like weekly or monthly or every 2 months, then I think a short-term strategy can work for you as well. but never use martingale and grid. In my opinion and based on all my experiences, from all the feedbacks I got from traders who are writing me about their journeys, because based on all those stories, hundreds of stories, most traders are losing 100% of their accounts with martingale and grid strategies. This is just my experience and my data about this. I hope you enjoyed this video, and if you did, subscribe to the channel and leave a comment about what kind of videos you want to see in the future in this topic or other topics as well. Ciao.